And we are live. Welcome back, everyone, to the Daily Crypto Market Podcast. It's Friday, July 5th, 2025. I'm Murph, and as always, I'm here with the man who reads order books for fun, Cooper.
Good to be here, Murph. And happy Friday to everyone tuning in.
Cooper, I've got to be honest, the market feels heavy. That's the only word for it. It feels like we're trying to push a boulder uphill and we just hit a really steep, muddy patch. The momentum we had seems to have completely evaporated over the last couple of days. What's the official vibe check?
Heavy is a perfect way to describe it, Murph. The data backs up your feeling completely. The overall market sentiment right now is decidedly bearish. We're seeing a classic risk-off move across the board, and it's not just a feeling, it's being driven by some very specific catalysts that we need to unpack. But before we dive into the deep end, the usual housekeeping. Nothing we say here is financial advice. We're here to provide analysis and education to help you navigate these markets, but you should always do your own research.
Absolutely. Consider this your daily dose of market perspective, not a prescription for your portfolio. So, let's get into the numbers. Lay it on us. Where are the big players sitting this morning?
Alright, let's run through the current prices. As of right now, Bitcoin is trading at $107,750.
Wow. So that drop from the $109K level was pretty sharp. It was knocking on the door of $110K just yesterday and got swatted down hard.
It did. A very firm rejection. And that rejection has echoed across the market. Ethereum is currently sitting at $2,490, struggling to hold the $2,500 psychological support.
Oof, back under $2,500 for ETH. That one stings a bit for the bulls. What about the high flyers? How's Solana holding up?
Solana is feeling the pressure as well. It's currently trading at $146.50. It's come down quite a bit from its recent highs above the $160 mark. And rounding out our main list, XRP is holding at $2.22.
Okay, so a sea of red. Bitcoin rejected, ETH back below a key level, SOL retreating. It all points back to that bearish sentiment you mentioned. So let's get to the $1 million question, or I guess in this case, the $100,000 question. Why? What happened to suddenly turn the mood so sour?
The primary driver, without a doubt, came from the macro environment yesterday. We got the non-farm payroll, or NFP, data for June. And to put it simply, it came in hot. Way hotter than anyone was expecting.
Okay, break that down for me and for anyone new to this. NFP is basically the big monthly jobs report in the US, right? And hot means the economy added more jobs than forecasted.
Exactly. On the surface, more people getting jobs sounds like great news, and for the mainstream economy, it is. It significantly reduces the immediate risk of a recession, which has been a lingering concern. However, for risk assets like crypto and even parts of the stock market, it's a bit of a good news is bad news scenario.
Right, I was just about to say that. It feels completely backwards. Why is a strong economy a bad thing for Bitcoin right now?
It all comes down to the Federal Reserve and interest rates. For the last few months, the market has been operating under the assumption that the economy was cooling off enough for the Fed to start cutting interest rates. Rate cuts mean cheaper money, more liquidity in the system, and historically that liquidity finds its way into speculative assets, driving up prices. That's been a huge part of the bull case.
So we were all banking on the Fed turning the money printed back on, or at least priming the pump.
Precisely. But this strong jobs report throws a wrench in those plans. It gives the Fed a very strong reason to say, hey, the economy is doing just fine, there's no need to cut rates yet. We need to keep fighting inflation. As a result, those expectations for a rate cut in the near future have softened dramatically. The market is now pricing in a higher for longer interest rate environment.
And higher for longer means that boring. Safe assets like government bonds suddenly look more attractive, right? They offer a decent yield with less risk, so capital flows out of the risky stuff, like crypto, and into safety.
That is the textbook definition of the capital flow. When you can get a guaranteed return from a treasury bond, the incentive to gamble on a volatile asset like Bitcoin diminishes for large institutional players. So, that macro event completely shifted the narrative this week, and it's why we're seeing this bearish pressure.
Okay, that makes a lot of sense. The macro rug pull. But it's never just one thing in crypto. What are the charts telling you? What's happening on the technical side that's compounding this?
The technicals are painting a very clear and frankly a very challenging picture for the bulls. As you noted, Bitcoin ran right up to the key resistance zone between $109,000 and $110,000. This isn't a new level, it's a massive wall of sell orders that has been building for a while.
So this isn't just a random price point. There's a reason the market is stalling right here.
The big reason. Looking at the order books and on-chain data, we can see significant selling pressure from long-term holders and whales large Bitcoin holders. They are using this liquidity and excitement around the $110K level to take profits. It's a classic distribution pattern where large, smart money sells into the buying pressure from smaller, retail investors who are getting euphoric.
So the whales are dumping on the little guys who are yelling to the moon at $109K.
In a manner of speaking, yes. And what's particularly interesting, and a bit concerning, is that this price action is eerily similar to some of the trends we saw last year in 2024. We saw similar patterns where the price would rally strongly into a well-defined resistance level, retail sentiment would get extremely bullish, and then large wallets would begin moving coins to exchanges and systematically selling, capping the upside and eventually triggering a sharp correction.
History doesn't repeat, but it often rhymes. So you're saying we've seen this movie before, and it didn't have a happy ending for the bulls in the short term?
The precedent is there. It suggests that breaking this $110K barrier isn't going to be a walk in the park. It's going to require a massive wave of new demand, or new bullish catalyst, to absorb all the supply that's sitting there waiting to be sold. With the macro headwind we just discussed, that new demand is hard to find right now.
So, we have a macro environment that's suddenly less friendly, and we have a technical ceiling made of concrete and whale sell orders. That's a tough combination. What does this mean for the alts? Is poor Ethereum just a passenger on the Bitcoin Express to nowhere? I thought the recent ETF news was supposed to give it more independent strength.
In a market like this, a risk-off market, correlations tend to spike towards one. That means almost everything follows Bitcoin's lead. The Ether ETFs are a fantastic long-term structural positive for the asset, but they can't defy short-term market gravity. When the tide of macro liquidity goes out, all boats get lowered, ETH included.
So even with its own unique fundamentals, it can't escape the general market fear. And falling back below $2,500 feels significant. Is that a key level we need to watch?
It is. $2,500 is a major psychological level for Ethereum. Holding above it suggests strength and the potential for a new leg up. Falling below it, as it has done, opens the door to a retest of lower support levels, perhaps down towards the $2,300 to $2,350 range if the selling pressure on Bitcoin continues. Traders will be watching that level very closely.
And what about Solana? It was the darling of the last rally, showing incredible relative strength. Now at $146.50, it seems to have lost some of its mojo.
Solana is a high beta play on the market. That means it tends to outperform in a bull market, but can also underperform in a bear market. It's more volatile. The drop from over $160 to below $147 is a reflection of that. As fear enters the market, investors do risk from more volatile names like SOL and either move to cash or rotate back into the safest crypto asset, which is Bitcoin. So Solana's price action is a direct symptom of the bearish sentiment we're seeing.
It's the first one people sell when they get scared. An XRP holding steady at $2.22. It seems to be in its own world sometimes, but even it can't fully escape the broader trend, can it?
No, it can't. While XRP has its own dedicated community and its price is often influenced by legal developments and partnership news, it still exists within the larger crypto ecosystem. Its stability around this price might suggest a strong base of holders, but it won't be able to stage a major rally on its own if Bitcoin and Ethereum are trending downwards. It's caught in the same gravitational pull.
So putting it all together, Cooper. The Fed pulls the punch bowl away because the economy is too strong. Bitcoin slams its head on a ceiling of whale sellers at $110K. And all the altcoins are getting dragged down in the confusion. It sounds pretty grim. What's the forward-looking statement here? What do we need to watch for that could change this picture?
The path forward has two main components, technical and macro. On the technical side, the battle lines are clearly drawn. The bulls absolutely must reclaim and hold support above, say, $105,000. If we lose that level, the next major support zone isn't until closer to the psychological $100K mark, or potentially even a low $90. The key upside level remains that $109K minus $110K resistance. We need to see a decisive break and hold above $110,000 on high volume to invalidate this bearish structure.
So, either we hold $105K to stop the bleeding, or we need a monster move to smash through $110K. Anything in between is just noise.
That's a good way to put it. On the macro front, the narrative now shifts. Since the jobs data was strong, all eyes will turn to the next inflation print, the CPI report. If that report comes in surprisingly cool, it could reignite hopes for a rate cut and counteract the negative sentiment from the jobs data. That's probably the biggest potential bullish catalyst on the horizon.
So we're back to waiting on government data releases. It feels like 2023 all over again. The fate of our decentralized future hangs on the Bureau of Labor Statistics.
It's the reality of a market that has matured and become integrated with the global financial system. Macro matters more than ever. My final thought is this is a time for patience. The market is giving clear signals. The resistance is holding and the macro environment has shifted. Forcing trades in this kind of environment is a low probability game. A smart play is to watch the key levels, wait for either a confirmation of the breakdown or a decisive breakout, and let the market tell you what it wants to do next.
Patience is the hardest virtue in crypto, but probably the most profitable. Excellent breakdown, Cooper. It's a complicated picture, but you've made it crystal clear. So, watch Bitcoin's line in the sand at $105K and the big boss battle at $110K, and pray for a friendly inflation number.
That's the summary. Let's see what the weekend holds.
We will indeed. Alright everyone, that's all the time we have for today. Thanks for tuning in. If you found this analysis helpful, do us a favor and hit that like button and subscribe so you don't miss our daily updates. We'll be back on Monday to see how this all plays out. Have a great weekend.
Take care, everyone. Stay safe out there.